We're going to talk about some companies that I think have a great chance of really surprising the market this quarter. Before we dive in, please take a minute and check out the link you see on your screen, fool.com/Frankel. It's the best way to support this work I'm doing. You can get some great investment ideas. Again, fool.com/Frankel. So let's dive right in. I want to share my screen. So before we dive in, let me just quickly give a disclaimer. Of course, nobody has a crystal ball that can predict when a company is or is not going to beat earnings expectations. If I could predict that every quarter, I'd be a very, very rich person right now. But with that in mind, I think all three of these stocks, all of which I own in my own portfolio, have a very high probability of surpassing the expectations of the market. So let's dive right in. The first one is actually one of my largest investments is Pinterest, ticker symbol PINS. So the current estimates are actually pretty aggressive. They call for 17% earnings growth year over year and pretty strong earnings growth. They're calling for 34 cents in earnings per share. And I mean, a year ago, they earned a penny per share. They were barely profitable. So, Pinterest ad initiatives really seem to be paying off. Remember, they brought in a new CEO a little over a year ago, Bill Reddy. He was a former Google executive, really big ad industry, heavyweight. And in a recent conference, recent Goldman Sachs tech conference, he said that they're seeing, quote, robust retail ad performance. He acknowledged there was some macroeconomic uncertainty, but a stable macro landscape right now. They've added some pretty impressive partnerships, including some with Amazon. These could really boost results. And Pinterest, since Bill Reddy took over, has a really good history of over delivering when it comes to earnings results. So I think this one has a really good chance of outperforming in its third quarter report that we'll see in a couple weeks. Number two, one I've talked about quite a bit lately. This is PayPal, and these two stocks are kind of related. Remember, a few years ago, PayPal was thinking about buying Pinterest. No one really knew why at the time, but it was kind of a disjointed strategy that was going on. Growth was kind of falling. They were just kind of grasping at anything they could think of. So the management team has been completely overhauled. New CEO Alex Chris took over about just over a year ago and is the newest person on their, or I'm sorry, is the longest tenured person on their leadership team. They also brought in former executives from SoFi, Citigroup, a few other big financial firms, and they've really kind of overhauled the strategy. Now they're really making some interesting moves to monetize. The current estimates call for about 6% revenue growth, which is pretty light, and about 14% earnings growth. The company has been prioritizing efficiency, so that's why the earnings growth estimate is significantly higher. I think they could beat on the top line. I'm going to go out on a limb here and kind of give a bold prediction that we're going to see PayPal post double-digit revenue growth. If not in this quarter, in the next one. Like I said, they've been making a lot of interesting moves lately, most of which are not visible in the numbers just yet. Earlier this year, they announced they were going to create an advertising platform, which I think makes a ton of sense, and the market is really overlooking the potential of that. You can't name a company that has better consumer spending data than PayPal with its own platform with Venmo. They know how people are spending money. It makes it a really effective way to target ads. They recently partnered with Shopify. Now PayPal is going to be a checkout option with Shopify payments. For context, Shopify did $41 billion of payment volume last quarter. That's a new partnership. They have been partnering with Shopify, but until recently was just in France. So now that brings it to the U.S. Shopify, their fast lane checkout is getting great reviews. Already, some of their biggest competitors like Adyen are rolling it out on their own platforms to partner with PayPal. The PayPal Everywhere, you might have seen the Will Ferrell commercials. It's PayPal's biggest ad campaign ever. Is essentially a best-in-breed cashback debit card product. Really impressive initiatives they're taking that should, help engage their existing user base, help grow their user base, help better monetize the platform. They're buying back shares very aggressively at the current valuations. I can't blame them for doing that. But again, they're making a lot of interesting moves, and I think PayPal is going to surprise in this quarter, but I think investors are really going to be surprised over the next year or two at how this company returns to growth. Last but certainly not least is one that I haven't talked about too much lately. I did a video on it not that long ago, but that's about it. Is Upstart, ticker symbol UPST. So current estimates call for about 11% revenue growth. Personal loan volume, which is Upstart's kind of bread and butter, was very, very low this time last year. That's roughly when interest rates were peaking. And they see the quarterly loss, not a profit, but they see the quarterly loss narrowing significantly from 48 cents per share to 15 cents per share. I think Pinterest will do even better. I would not be shocked if they had we're closer to break even on the bottom line. There's not a lot of faith in the stock. It's one of the most shorted companies that I own in my portfolio. And basically, interest rates really dropped faster than expected in the third quarter. And as I said in the video I did on Pinterest not too long ago, you can find that on my channel. Pinterest needs higher loan volume. If that's the key to profitability. They've already shown that with higher loan volume, they can be a profitable business. They were a very profitable company when they went public a few years ago. They continue to grow the personal loan business. They added 6 new lending partners in the past 3 months alone. And in the current environment, they really haven't been investing heavily in the business, but there's a lot of long-term potential in things like auto lending and home equity lending and small business lending. But I think in this past quarter, we saw interest rates really fall in anticipation of the Fed's rate cuts. Personal loan rates are no exception to that. They were kind of gravitating downward as well. So I think we're going to see that loan volumes were a little bit higher than the market thinks they were. There were some other positive items as well. They successfully refinanced some debt at what I think are very favorable convertible note terms. Upstart reports earnings. They're actually the latest of the 3 to report. They report November 7th, so not for a little while yet. But I think they are going to pleasantly surprise the market when they do. The business has really done a great job of tightening its belt and kind of figuring out how to exist, even if loan volume doesn't return to 2021 levels anytime soon, which I don't think it will. But I think this is going to be a profitable company before too long, and it's one that I am watching very closely. I'd love to hear what you think of these 3 stocks, if they're going to surprise the market like I think they will. If you don't, which ones are your favorites out of them? I'll do my best to respond to any questions or comments individually. And thanks for watching. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.